All right, gentlemen and ladies, I'd like to call this meeting of the um Commission on Worldwide Combined Reporting for Unitary Businesses under the Business Profits Tax. So, everybody who has been participating actively is here, with the exception of Senator Murphy, who I hope will be able to join us. And I know he is staying apprised of everything, even though he's got a busy schedule that required him to leave a bit early last week. I'd like to just review where we're at in the process and what our objectives are for today and for winding up over the next several weeks. So much of this has been said, but I think we had a very productive hearing last week, and I'm going to review the bidding in terms of who we've heard from. Um, and so my objective for today is that at the very least, everything we have uh, before us, both in terms of verbal testimony as well as written submissions that have been circulated, is on the table, discussed. Questions are all surface. And if there's any additional information that we're trying to seek in order to get ourselves ready for writing, a report, hopefully a fairly definitive report, then let's identify those today, and we can have a few follow-throughs. I think there could be a little bit of that. I don't expect that there will be very much. So, at the least, we know what's on the table and we've fleshed it out. Um, if we're in a position to see, where the chips are falling and where our views are, I think it would be constructive before the end of this session to know where we're headed, to have the opinion of each of us and understand whether we have a unified view, or whether we're preparing to have a majority and a minority report. And I think the most optimistic scenario is that we leave here today in a position to say who's drafting what, and let that one or two people get going. So, on October 17th, we'll meet again at 10 a.m. And if the optimistic scenario is underway, we should be able to be reviewing a draft report and make modifications, changes, suggestions, and see whether, how close are we to actually having something that we consider a finished product. I I think it would be desirable, if we're at that point on the 17th and don't need to physically meet again. It is possible to do some editing, refinements of the report, and sign offs without having to get together. And of course, we have two different deadlines, so to speak. One is the formal deadline of November 1st to file a final report, at which point this commission goes out of business. And the second is, as a practical matter, to assist the House Ways and Means Committee in evaluating HB 121, Representative Schamberg's bill on the subject of combined worldwide reporting, which the Ways and Means has retained, and has to file their report to the full House no later than November 17th. And I believe it's the intention of the chairman and the vice chair to do that in the first week of November. So I think this is all realistic, but it means we've got to stay on our toes. Um, so between our clerk and our research assistant, Jen 4, I want to make sure that as we go ahead with the preparation of the report and final submission, that we have a complete record of all whom we've heard from. Um, so I think we've been very fortunate. Um, to get a good cross section. I think that both the pros and the cons have been well represented. And so we have Mr. Opal and his two colleagues. I see Mr. Gar is here again today, who spoke in favor. We have Ms. Beeson and Mr. Pasetsky from the Global Business Alliance, who spoke in opposition. Professor Hellerstein gave us the benefit of a fairly neutral account that I think was extremely good on the history and provides great context. Both Mr. Bucks, formerly of the Montana Department of Revenue, and Professor Shamsky encouraged approval of this proposal, and Carl Frieden of Cost spoke against it. And then, of course, the DRA, without taking a position, gave us some sense of what the challenges of implementation might be. In addition, the record will include various articles from tax notes, Supreme Court decisions in the Barclay and Caterpillar cases, some briefs supplied by Mr. Gar. Did I say tax notes articles? Some submissions from the NTU, the National Taxpayers Union, and Jordan, what's the other one called? The Taxpayer Foundation? Tax Foundation? Tax Foundation. And those two, NTU and Tax Foundation, were opposed to the idea. So I will admit that with the very large amount of information that's been sent to us, I've probably read 75, 80% of it. So I still have more to read. And I would strongly encourage members to read as much as they can, but it's a lot, and I suspect we'll all get, to different degrees of completeness. So we have quite a record, and I'm not familiar yet with the procedure, but I want to make sure between our clerk and Gen 4 that everything that's been circulated becomes a formal part of the permanent record of the commission.
I went upstairs and saw Jen this morning, and she says, thank you for all those things that were sent to her. She is making all the physical copies that will go into all this will go into one final binder. So she's on top of it.
Okay. Very good. So let's see. With that introduction, is there any member who would like to say anything before we get ready to queue up a discussion on the issue's merits? Yes, Representative Hillary.
I would like some clarification because apparently the Minnesota House passed this, but I'm not sure if the Senate killed it or if it was killed by veto, and I'm not sure why it didn't go into law. And I would like some clarification on that if somebody could help.
All I can say is that the Senate did not pass on it. It did not get vetoed. It was just died a agonizing death. That's my interpretation.
So passed the Minnesota House and died in the Senate.
Passed one section. Could have been Ways and Means, but then it died.
Mm-hmm. Mm-hmm.
I think it was on the floor.
Could have been on the floor.
Okay, so it's a good question that
Maine
that
was the
we
same
may.
way. Maine has just gone through the same procedure. It officially died also, probably on the floor.
The question was well, the second part of the question was why.
Mm-hmm. Okay, I'm going to ask Jen if she can help to clarify what the final disposition and in both Minnesota and Maine was, and to a degree, what was the point at which it fell. Okay. Okay, other general questions, whether it's process or information we need. Mr. Kennedy.
I'm just curious, relative to, majority and minority report, is it possible, and I'm thinking because of the information that was provided and because of the newness relative to the taxation of guilty in New Hampshire and the DRA not having sufficient information to relay how that might affect the taxation of foreign entities, that more time might be needed for this commission to get data, say, in another year? And is it possible that instead of issuing a report, that we would simply indicate that additional time was needed, or would that simply not be what comes out of this, and that there would be another commission that would be appointed in another year?
Okay, good questions. Our charge and our time limit and our duty to report are established in the law that was passed in 2022, and they stand, speak for themselves and can't be changed. So we will file a report, and that report, we're not under an obligation to reach a unified position. We're also actually not under an obligation to make a clear recommendation for or against. We may choose to, but our report, I think, should represent our best understanding of the facts and the situation at this time as we understand it. So equivocating, explaining and identifying what are unknowns, indicating the reason for uncertainty certainly can be a significant part of the report. But dodging, not reporting are not options, and extending our own life is not an option. It's always possible that the legislature could decide to create a new commission or do something to extend the life of the study. It may be that the action now switches to the House and Senate Ways and Means committees. But so I would just say we'll make the best record that we can and identify what do we think would, if we had known X, Y, and Z, that might have made our report more definitive. So I think, we disclose the weaknesses as well. That make sense? Okay. Good morning, Senator Murphy. We've just done an introduction and a review of the information that's before us, both those who testified, as well as the written information. So there's a huge amount that's been circulated, and it's kind of overwhelming.
I did get the link to the huge file this morning or yesterday, so thank you very much.
Right. So, we're all at a different place as far as what we've been able to fully absorb so far, and everything that's been circulated will be part of the commission's record. And the purpose today then is to evaluate what we have in front of us and decide where we're going. So are there any other comments or questions before we go into the merits? Okay, I would, along the lines of what Mr. Kennedy just asked, I would echo his question. It would be great if we were able to quantify how much tax revenue the state of New Hampshire has taken in recent years as a result of the guilty tax. And it would be great to identify or quantify how much has been taken in as a result of the taxation of foreign dividends. Those are two sources of funds that in part they tax some degree of foreign revenue, foreign source revenue. And so they might be viewed as an offset against what an advocate of the combined worldwide reporting might expect to gain. I've had a conversation with Keene already. I think that we have only a very limited ability to quantify those, but he's going to look into those. So whatever you can find or an explanation of what you can't find would be great in the coming days so that it can be baked into the cake by before October 17th. Okay. So that's one line of inquiry. I think another line of inquiry is, to what extent can we delineate the portion of our business profits tax that are derived from multinationals, sub A, US based multinationals, sub B, foreign based multinationals? Perhaps a different way of saying that is, to what extent are our tax revenues derived from filers who currently use the water's edge method? And I don't think that really gets us anywhere near an idea for, what this proposal, if it was enacted, would raise. I don't think it gets there at all, but at least it gives us some sense of what portion of our tax base are multinationals in either the home-based or the foreign-based context. So those would be my two requests, and I anticipate there's some real limits on your giving us good data, but whatever you can would be great.
Good morning. So definitely we'll look into getting that information. So in regards to the revenue from the guilty income, I believe I explained it in the previous meeting that currently we do not have the capability to, we do have, but then we have not tracked the amount of guilty income that is reported on the New Hampshire returns. That is not mapped, that line, specific line. Actually, how we would propose to get to that number is actually probably to back into that number, because that guilty income is something that's already reported on a federal return and it flows into the New Hampshire return. And what is reported on the New Hampshire return that's kind of separate from the federal return is just to allow that 50% deduction on the guilty income. And so the only way for us to currently back into that number is to potentially get that 50% number and then multiply that by 2. Currently, that particular line on that form is not mapped onto the system. So mapping that would only give us information prospectively as opposed to information that was submitted in the past. So I doubt that we will be able to come up with any kind of figure that would be useful for the report for the guilty income. But we will definitely have a look into for the foreign dividends. Most likely we might be able to get that information. And then as for the Water's Edge filing, yes, so the multinationals would be submitting a Water's Edge return for New Hampshire purposes, but also just bear in mind that Water's Edge return also includes filers who may not be multinational but do file a combined return. So they are potentially U.S. Just limited to the U.S. I guess conducting business in the U.S., but then they have multi-jurisdictional.
So that's a very important point you're making, because the Water's Edge is utilized by any multi-state company that has to allocate a portion across states.
That is correct.
Knowing how many follow the Water's Edge does not actually lead us to the answer of which ones are multinational and would potentially take advantage of.
Right. We can try to look into that to see if we can dig into our system, see if there's any way for us to delineate, okay, which one exactly is a multinational versus a U.S. company, or solely a U.S. company just filing a Water's Edge return. We can try to look into that to see if we can come up with those statistics.
Okay. Thank you for undertaking that. Now, it occurs to me also, before we get into the merits, I've just been handed 2 memos this morning, which I believe we all have. And since we haven't had a chance to read them yet, one is from Keen, follow up to the various questions that arose last week. The other one is from the New Hampshire Society of CPAs, that's come from Matt. I'm going to ask each of you, if you will, just quickly walk us through this so that we have the gist of what you've got here without having to all pause and read it.
Sure. The email, this handout that I provided this morning is the email that I sent out this morning, um, answering the two questions that was posed to the DRA. One is to provide a brief description of how potentially that the audit process would change if we were moving from a Waters Edge combined filing to a worldwide combined filing. And then the other question is what would be what was the fiscal impact back in 1986 when we converted from the Waters from the worldwide filing to the Waters Edge filing system. So the answer to the first one is in terms of the audit process, we do not see a huge change in the audit process, but as what Fred, the director of our director of audit, testified last week, is that it's just more of everything. So it'll be more, the volume would be higher in terms of the documentation that needs to be reviewed, and potentially more returns coming in, and the analysis potentially could be different because it's going to be a worldwide analysis versus a Waters Edge analysis. And then also there could be potential hurdles that we could see in the performing a worldwide audit, and we've listed that out here in terms of currency exchange rates, the international accounting and tax reporting methods, sort of reconciling that to the U.S. system, and then the language barrier, and then we potentially could also see field visits to international locations where the books or the key personnel are located. For the second answer, the answer to the second question is for the revenue change from worldwide to Waters Edge. So when I did the research and saw that we tried to perform a fiscal note back then, and we were not able to really calculate anything specific because when we were in worldwide, the information that's collected is different than what would have been for Waters Edge, because worldwide, the probably the denominator would be on a worldwide basis. We wouldn't have distinguished, okay, what would have been if it was a Waters Edge, and then similarly, probably the tax base, the income, the revenue, the taxable income from the federal side would probably be a combination of worldwide income versus what would have been for New Hampshire or Waters Edge. But we did provide the business profits tax and business enterprise tax revenue for the fiscal years dating back from 1980 to 1991. And hopefully that would be some help to the commission. As you can see, for fiscal year 1986, you see that, so bear in mind this is fiscal year revenue. So fiscal year revenue means that it's revenue collected between July 1 and June 30th. And then it would also be for any of the returns that have been submitted during that period. So it could be a combination of different tax years, returns from different tax years that was submitted and paid.
So is it probable that the act of the enacting the repeal of worldwide combined reporting in 1986 probably didn't take effect until the 87 or 88 fiscal tax year,
Potentially,
right?
yeah, right. Yeah.
So I do see a significant jump from 110 to 150 in 87. Do you think we should read anything into that?
We don't have much more to provide, but just to speculate, yeah, that potentially could be when we change from worldwide to Waters Edge.
Yes, Representative Valerie.
Yeah, thank you, I'm sorry.
That's fine.
Not enough coffee. The chart is very interesting, although it seems to be showing a decrease coming down from 1989. It would be interesting to see what happens from 91 going forward when we again had another, both for the committee, Ways and Means, and for this particular report, when we have a different type of tax form with a reduced business tax and an increase in revenues from that, which I, at least reading the charts that DRA puts out, you guys put out, seems to be increasing with revenues with the decreased tax rate. So that would be something I would like to also see added into this, because it would help balance, in my mind, how the tax policy affects our business taxes. This, and I also don't understand why it went down. And do you have any insight into that? From 89 down, well, 89 down. That's 20,000 or 20 million drop in 1 year is interesting. That's a code
I
word.
wonder if it has something to do with the fact that there was a recession with the Iraq War.
So yes,
in-
so I can't provide much more than that, but then as Representative Spilsbury is saying, this fiscal year revenue analysis, it's not just what we change in New Hampshire, but because our revenue is the calculation of New Hampshire taxes runs off from the federal calculation. So whatever the companies are feeling from the federal side would be reflected on the New Hampshire return as well. So any kind of national activity that maybe if there's some kind of boom in the national economy, creating huge revenues for the taxpayers, that probably will trickle down to the New Hampshire returns as well, and the inverse is probably accurate as well.
I don't know what this would tell us, but if it's not a lot of work, I assume it's information readily available.
It is.
I think it would be very interesting to extend this chart from the first implementation of the BPT, which I think was 1970,
Okay.
to current date. Again, I don't know what it would tell us, but since it's so readily available, perhaps you can have that done.
Yes, sure. I believe that
Sorry
information
for all
is
these
available.
assignments.
No, it's fine. But this one wouldn't be too challenging because I believe all this information is on our annual report already.
Probably.
Yeah.
So you're helping us by framing it and putting it in front of our eyes.
Yep.
Thank you. Yes.
I presume it wouldn't be too challenging. I wasn't doing taxes back in those years. Could you kind of identify what the tax rates were? And also include, I don't know if BET was, I don't know when BET was created, but I'd be curious to see if there were changes in the rates were more or less, or if they changed over those years to see how that might have affected
Sure.
the total.
Yep. But bear in mind as well, this is fiscal year revenue. Those tax rate changes would be tax year.
Sure.
Yeah.
Great. So that sounds very constructive. So I'm envisioning a multi-column chart with the BPT, the BET broken out and then aggregated, and the rate. Is that?
We won't be able to break out the BPT and the BET revenue. It will be a combined BPT and BET revenue, because that's what we've been collecting the data so far. Right. And then so it will be a similar chart to this with the fiscal year and the BPT and BET tax revenue. And then on the side, potentially, because it will be impossible to superimpose the tax rate change on a fiscal year basis. So the notes on the tax rate change would be as a note to the chart.
Okay.
Right.
That sounds helpful, though.
Okay.
Yes, Representative Schamberg.
Thank you, Mr. Chairman. Going back to your original paper here, numbers 1 through 8, taxpayer selection all the way to closure. I guess my question is, can audits be done by reporting through the U.S. offices of these subsidiaries?
I'm gonna have our
Don't-
audit director chime in
Oh.
on that, but then I'll
So
potentially say that we could, but then it depends on how much we want to can rely on that information, I suppose.
I did specifically ask Mr. Coolbroth to attend today because I anticipated questions would arise that he could help us with. So if you, I'll invite you forward to dig in on that one.
Push that button.
Fred Coolbroth, Director of Audit, for the record. And thanks to the Commission again for having me here. So, to answer your question, Representative, I do envision some worldwide audits occurring at the domestic offices of these companies. That determination would be based off of who the taxpayer is, what their worldwide operations look like, and thus who we can be expected to meet and what documents we can be expected to find at their domestic offices, their domestic headquarters. So if it's reasonable based on the composition of the taxpayer, if it's reasonable that the hosting the audit domestically would yield the type of information we would want provided, then we would do it there, just like under a Water's Edge audit, where we would send field auditors to their domestic offices, interview folks there, and start the document production process at their local offices.
Follow up, Mr. Well then, let me ask this. Can the revenue agency adopt rules requiring the maintenance and availability for audit of taxpayer information relevant to the conduct of worldwide tax auditing? I mean, could all that information you need to ever do a worldwide audit be
Sure.
sent to that subsidiary office for you to undertake without having to use, you mentioned language, you mentioned, can't the DRA set their own rules and
Sure.
regulations?
Yep. So we can adopt that rule to the extent taxpayers will comply with it would be to be determined. We have plenty of rules now that we've adopted that taxpayers don't comply with. The challenges we would run into, even with perfect compliance with that, and there would be both unintentional and potentially intentional non-compliance with that. But the challenges there would be we'd get pushback for certain types of records. Most of this stuff can be provided electronically, and we do receive the bulk of our records through electronic transmittal. Some, and I think Dan Bucks testified to this during the last commission meeting. I think maybe Keynes mentioned this, but at any rate, there are certain documents that companies tend not to, or sometimes do not preserve completely in digital form. But the main drawback to that approach would be we still would be missing opportunities that we would only have if we traveled to their other foreign locations. So seeing where all of their records are kept originally, seeing those operations, interviewing those people. So there would be limits. There would be limits on that approach. But to answer your question, we can adopt that rule, and there presumably would be some amount of compliance with it. I don't know that there would. I am skeptical that there would be perfect compliance. Sure, absolutely. Yep.
Can I ask a question
Yes.
to Keen? Keen, in the DRA annual audits from 2012 to 2022, I see there was, I don't know if these are fines or are they misapplied ways that they deducted their money. You say, no, you can't deduct this, you can't deduct that. Let me pass this. Can I pass this down to Keen for him to look at a moment? You do audits and you come up with like 36 million in 2022. Are these just technical errors that people have misinterpreted the domestic liability that they have, or were they maybe they didn't think they were going to get caught doing it? When you do those audits, yes.
I might have to pass this on to Fred. So this looks like a document that tables that tracks the from fiscal year 2012 to 22, the audit division report on our annual report, and it potentially talks about something to do with non-compliance of in a certain manner. I'm not super familiar with this, but I'm going to pass it on to Fred.
And the reason I ask it, Keen, I'm sorry.
So just to be clear, the purpose of today is a all-out discussion, so I'm going to keep it very informal. This should just be an opportunity to flesh everything out.
Sure. This what this looks like to me is not a document that the audit division prepared, but it looks like information that came from our annual reports and
That is
was
correct.
reorganized. Yeah. So this looks like our
If I can just clarify, it's been culled by you from the reports, right?
Oh, gotcha.
I wasn't sending everything to you.
Sure. So the dollar column, the second column next to the year, next to the fiscal year, would be our total assessment amounts. And I believe this is tax only, but there might be interest in payments in these amounts. Not sure that's super relevant for this conversation. The next number looks to be the number of returns that we adjusted as a result of those audits. And to answer your question, these adjustments reflect a variety of issues and frankly motivations behind the non-compliance. So based on the size of the taxpayer and their activity here, they may be able to allocate a certain amount of resources and time to preparing their New Hampshire tax return. And then there's one taxpayer in particular I'm thinking about. I will obviously not name them for confidentiality purposes, but they are a very large multinational, let's put it that way. They're active everywhere, not just domestically, but across the world. And it's very obvious when you look at their return that the way they treat New Hampshire is we really can't justify spending a lot of time preparing this return. Just throw a reasonable amount of money at them and hope they go away. And historically, our audit presence of this taxpayer has been pretty light because when you look at it, it's like, okay, this is very sloppy, but if we were to adjust this, I don't know I don't know where this would go. They've just done this at a very high level, obviously to make it through audit selection, and it looks reasonable on its face, so they don't get selected. That kind of behavior is on the one end of the spectrum where regardless of where the taxpayer lands in their payment to New Hampshire and their tax, there's only so much in terms of resources, and that at the end of the day, that behavior might result in a big adjustment from New Hampshire. If we do select them for audit, not this taxpayer, but a different one. If we do select a taxpayer and it becomes apparent that they've not spent a lot of time with our rules, they've misapplied several concepts, there could be big adjustments coming out of New Hampshire. And the size of that adjustment doesn't necessarily reflect malintent on their part. It's just there's only so much. They've got a limited staff, huge presence, and they do their best. So sometimes that behavior means New Hampshire might actually win in a sense because the taxpayer just throws their hands up and throws what to New Hampshire is a sizable amount of money at us. Sometimes they underreport. On the other end of the spectrum, for sure, there are taxpayers reflected in these numbers who engage in very deliberate, very often sophisticated tax planning. And when we find that, we bust that up and we assess them, and that can be large. But it's a spectrum with the one taxpayer on one end of the spectrum who has underreported or underpaid their tax through no malintent, just ignorance and lack of resources, to the other end of the spectrum where it's the result of very deliberate tax planning. And to what extent that's just aggressive positions that we challenge and we'll take an assessment on, or we'll issue an assessment on, or to what extent it even rises beyond that to potential criminal activity, that's a different discussion. But both those far-ranging sides of the spectrum and then everything in between are encompassed in these numbers here. So the size of the adjustment isn't always reflective of what's going on in people's heads. Sometimes people will engage in really sophisticated tax planning just to save a buck, and it's like, I don't know what the purpose of that is, other than you think you're getting one over on us.
Well, thank you for that.
So if I'm interpreting you correctly, a filer who is trying to ease up on the administrative burden might even round up.
Yes, that for sure happens.
We don't know what's the prevailing practice, but we suspect that's at least one of the scenarios.
That's one of the scenarios. I don't want to suggest that that's common, but it does happen. It happens from some of the biggest taxpayers.
Okay,
I've got one more.
Representative Schamberg.
Back to-
Yep, we're staying on Keene's memo.
Keen's, well, he's opened the door here. And Mr. Kennedy opened the door last week on a question I have here. Guilty only taxes U.S.-based multinational companies, or only applies to U.S.-based national companies, multinational, or Mr. Foley, I'm sorry. It does not apply to foreign national, does it not?
It only applies to U.S. taxpayers. So U.S. persons, flow-through businesses, which are taxed as entities, obviously in New Hampshire, U.S. C Corps, this would flow up to them. So recall I gave that wonderful explanation, 10%, you have to have a U.S. person, which can be a flow-through trust, what have you. They have to own it. An interest in a foreign entity, and there's an aggregation. But correct.
So my follow-up question to you then would be, are U.S. multinationals taxed one way and then foreign multinationals that are based here in the United States?
All depends, because you've got a giant mixed bag, right? In that you could have a foreign parented group that has a U.S. entity that from there has Mexico and Canada underneath it, or its own subsidiaries. So it could be this chain, right? But in general, income earned by the foreign parent or other foreign brother sister companies, right? So if the U.S. was a subsidiary of foreign, that income's not going to be subject in general to the U.S. tax base.
If I can just make sure we're clear on this. So it doesn't reach the foreign sourced income, but it does reach the U.S. income of a foreign entity's U.S. based operation.
Correct.
I also just want to add that if a foreign company that conducts business activity in New Hampshire, they will be subject to New Hampshire taxes as well, right?
Nexus, right?
Yes. So if they have business activity in New Hampshire, and they would be filing as a potentially like a separate company, other than so they would be subject to New Hampshire taxes.
Okay. Good. The takeaway that I have on the audit process is it's the same process,
Correct.
but it's the more of everything and the complications. Sometimes we legislators make very loose analogies when we try to understand things, but I had the interesting experience of working in the Netherlands for several years. So I'm talking about personal income tax, which is distinct. And of course, in personal income tax, what happens is you pay the tax of the foreign country in which you're working, and then you take a credit and prepare a U.S. tax return. I've always done my own tax returns, with the exception of 3 years where I lived in Europe. And just the experience of being an individual resulted in a tax return approximately an inch thick that I couldn't understand even when the tax accountant prepared it and presented it to me. And I'm saying I couldn't understand it as someone who has always prepared his own tax returns otherwise. So extrapolating from that very loosely, I can only imagine the complexity of drawing in foreign source revenue from potentially dozens, if not hundreds, of different entities. I also had the experience during that time in the Netherlands of being the general manager for marketing of the largest shipping company in the world for all of Europe and Middle East. So I was responsible for 34 countries. And I saw what the challenges are of trying to coordinate an enterprise across 34 currencies. This was before the euro. And not quite 34, but nearly as many languages. It's extraordinarily difficult. So when I think of the audit process, if we're trying to take the measure of foreign earned income, the auditors at least need to have the authority, the power, if necessary, to look behind what they've been presented. That's the fundamental nature of an audit. And those kinds of records that are going to back up what the foreign source revenue of affiliated units that have no direct activity in the United States themselves is not going to be held by a subsidiary office in the United States. I can't even imagine the sweep of the document request if you were to insist that the U.S.-based subsidiary became the repository for all of the records of the various foreign affiliates. It's unimaginable. You wouldn't even know whether they had fulfilled the request or not. And so I do think, Representative Schamberg, that the audit, not everybody gets audited. Some people get light audits. Some people get intensive audits. But in the event of an intensive audit, being unable to go to the source documents and make random searches would completely handicap the audit, in my opinion. So I'm just an individual extrapolating out. The amount of complexity involved is just staggering, practically indescribable.
I have a question for
Yes.
my question is, just looking forward.
Yep.
Okay, since we're going to single sales factor.
Yep.
All right. Does the single sales factor method affect New Hampshire's taxation of foreign dividends received by U.S. multinationals? Since we dropped the old method of payroll
Yes.
property.
Yep. That's a great question. So the foreign dividends get separate apportionment from the rest of from all other income. So as you note, Representative Schamberg, we take all other sources of income into the return. We subject them to New Hampshire apportionment, and that gives us our apportionment percentage. The foreign dividends and income classes like foreign dividends, so GILTI, Subpart F, but all of those income classes that some folks have called foreign income, they get separate apportionment treatment in the New Hampshire return. So they get carved out of the general apportionment. They get their own apportionment, and then get added back in to the whole into the hopper at the end of it to generate your full New Hampshire tax liability. In terms of how excluding the other apportionment, the traditional three factors, payroll and property, taking them out of it, there are winners and losers to doing that. Some folks with a lot of payroll and property here benefit from, or tend to stand to benefit from, single sales factor, because now there's those amounts no longer count towards their apportionment. Folks who traditionally benefited from not having much of a footprint here in New Hampshire with payroll or people, they tend to quote unquote become losers. I don't like that term, but they tend to see a potential increase in their tax liability moving to single sales factor. We don't have, as you noted, we've just gone there. The data is just coming in basically right now, so we don't really have a good sense for how that shakes out. So we don't know whether that move to single sales factor in isolation, we don't know if that will be revenue neutral or revenue positive for the state. We're still waiting to see what happens there, and then to what extent you can parse that out from all of the other factors that weigh in on their tax base, like Keen was talking about before, broader economic trends, what else is going on at the federal level, that sort of thing. It's I leave that to Keen and his team to decide what they can parse out from that. But as a general matter, I do think it's a little early for us to be able to tell what the revenue impact is from moving to single sales. Thank you.
Excuse me.
Mhm.
So I'm sure we will come back to the single sales factor influence as we keep talking about it. Anything else for this moment on the memo from Keen Wong? If not, Matt Foley has also provided us something that I haven't read yet. Matt, do you want to just give us a quick overview?
Yeah, sure. This is from the society, and it's almost on the other side of Keene. So this is more of the practitioner perspective, right? So what does this mean to us? More work, at the end of the day. It was interesting. I forget the report, and I know it was back from the 80s, but the $900 to prepare one of these worldwide returns, I think, was floated. And it's interesting to hear that. We wish, right? I mean, the issue would be this information currently, unless our client was to already be filing voluntarily on a worldwide basis in another jurisdiction, we actually have to go through and create a separate federal return that we can kind of group into the combined report to submit to the state and put in the combined report itself. Some of the tax softwares are not the kindest for some reason or another to the New Hampshire combined reporting. It can require a lot of manual adjustments, a lot of frustrations there. Something that's commonly worked through. And then there's just information gathering and kind of looking at this, depending on the number of foreign entities we're talking about here, and entities could take different forms, right? So we've kind of focused on GILTI, which applies to controlled foreign corporations. We could have foreign partnerships that we have to consider in doing reporting for them. We could have foreign disregarded entities, LLC equivalents, and the like. so on and so forth, that would have to be analyzed, kind of aggregated and put through the return. And we would need more than just their, baseline taxable income. We would need apportionment data, state modifications, and the like. So there's a lot of effort that goes into that. Workable challenge, but a challenge nonetheless that should just be highlighted. A lot of the impediments there have already been discussed, and they're similar to what Keen mentioned, some of them too. Currency, translation. We could have tax year gaps, right? So, you could have a calendar taxpayer here, but they adopt the UK of 331, or India, which have a non-calendar tax year in general. So dealing with issues like that. The second point here is one I kind of already referenced, but or maybe not. Who would be in this unitary group, given that there's not a specific identification based on voter value on how we would determine that? That would take analysis and education. The mandatory requirement is flagged on the second page, where the other jurisdictions that have adopted this, there is a ability to opt out. And then something I'm sure will be brought up, maybe this will spur it, is the uncertainty regarding whether this would lead to an increase or decrease in New Hampshire business tax revenues. We've referenced kind of things that are already in the tax base and being affected, and what would be the impact of this. Just highlighting that as an issue that we see. So.
Very good. So I look forward to reading this closely later on. But what I see you're really largely hitting on is the huge compliance burden and the uncertainty of what this scheme would actually yield.
Agreed.
Okay. So I'll recognize any member as you wish, but let's just talk about the things that are in front of us. And I think this last paragraph in your memo, Matt, is worth focusing on. And I'm just going to read it out loud. It's unclear if mandatory worldwide reporting would lead to an increase or a decrease of New Hampshire business tax revenues. Including the income or loss of any unitary foreign affiliates would also require including worldwide apportionment data for those entities, e.g. worldwide sales. Many foreign entities would not apportion much, if any, activity to New Hampshire, but their total activity would be included in the denominator of the apportionment factors. So in theory, while more income may be captured in a worldwide tax return, New Hampshire apportionment could be significantly diluted, leading to a decrease in New Hampshire business tax revenues in many instances. I'd like to elaborate on this as I understand it. And let's make this a point of, focused conversation for a bit. I was intrigued during our hearing last week when Representative Ullery several times postulated the hypothetical with a shipyard in Scotland, shipyard in Denmark. I think the shipyards moved around in the different. And so I spent a lot of time. Yeah, I spent quite a bit of time thinking about this over the past week, and I thought perhaps the most salient thing that I read on this subject during last week, I want to commend it to everybody, even if you don't get a chance to read everything we've received. There were two write-ups from the Tax Foundation, and they took a position squarely opposed to worldwide combined reporting. The headline of one of them was something along the lines of let's leave worldwide reporting in the 1980s where it belongs. So their viewpoint is clear. But what was so striking to me about these two articles is, I think, I don't want to overstate this, but they just blew out of the water the estimates from ITEP, so Institute of Taxation and Economic Policy, ITEP, had written an article that we received a couple weeks ago titled A Simple Fix. And it made estimates of the total amount, quote, left on the table by virtue of the fact that none of the 50 states currently has the worldwide combined reporting. And then they carved that out by state, and they assigned $177 million to New Hampshire. And that figure was mentioned by a number of our presenters last week. But the Tax Foundation articles absolutely demolish those estimates. There is just simply so much flaw in the assumptions and the methodology that the figure's not credible. And I guess I'm asserting this as my personal opinion, but that $177 million estimate is just simply not supportable, not workable. So I think it means that we remain in the dark in speculating what theoretically we could gain. What the Tax Foundation articles really highlight is that the fundamental flaw is that we use formulary apportionment. So the United States IRS uses arm's length separate entity filing, and it's only the states that have decided to use combined reporting, albeit limited at the water's edge, who are using the formulary apportionment. And this has just been highlighted minutes ago by Representative Schamberg and Mr. Coolbroth. We're only at the very, very beginning stages of having changed our own apportionment from 3-factor to single sales factor. So here we are with a business tax that, as of this past year, only looks at sales activity. So what does apportionment involve if we have worldwide combined reporting? It's just as Mr. Foley's memo says here, it draws in all of this activity from around the world, dramatically increasing the denominator of an equation, but the activity being taxed is still the sales in the state of New Hampshire. So the Tax Foundation, for example, uses it postulates a situation where you have a company that's doing $10 million of business here and 90 million somewhere else, and you have you bring in all of the worldwide activity, but now your denominator explodes by 10 times, and you're basically taxing a lot of activity that occurs somewhere else in the world under completely different circumstances, under different rates. So it strikes me that it distorts the equation drastically. That, as Mr. Coolbroth suggested a few minutes ago, there will be winners and losers, and we won't know in advance who's going to win and who's going to lose. And in fact, the company that wins this year might lose next year. The bottom line is it's going to depend, just like Representative Ullery suggested, on how their profits are doing, relatively speaking, somewhere else. And if their profits were lower elsewhere on average or in the aggregate than New Hampshire, it will actually take their tax liability to New Hampshire down. And if their profits were greater somewhere else, it takes them up. But there's like no rhyme or reason. And the bottom line is, when you look at what the impact is, it has nothing to do with what's going on in New Hampshire. So I think at the very least, this handicaps us, and any of these estimates that have been made that we've seen, specifically the one by ITEP, this simply should not be considered. Too flawed. And I would suggest you read those two articles carefully, not so much for the position, but for their assessment of the math and the flaws in the method.
Mr. Chairman, I did
Yes,
read
sir.
that article. And I sort of disagree with your assessment, not yours, their assessment, because they provide no other methodology how they performed their assessment other than making generalized statements. I do not think that they have undertaken, as the methodology of the ITEP did in 2019. May not agree with the 177, and it might be a little bit high, but someone is not paying their full tax liability. And from the Fact Coalition of out of Washington D.C., the Senate Bill 638 that was just recently passed by the Senate, the House, and signed by the President requires the large multinationals to begin country-by-country reporting of tax and operational data to the Securities and Exchange Commission. And the reason for this is that there are investors, public reporting that is needed for people to know on the boards and people that are investing what is the true picture of your company. And I bring up this 177 million may not be much in the eyes of certain people in New Hampshire. But when audits were done, like in the McDonald Corporation in France, they ended up having to pay $1.3 billion to settle their allegations of transfer pricing. And if you go to the U.S. tax court ruled that in this country, that Coca-Cola used profit shifting to underpay $3.3 billion from 2007 to 2009. And when they corrected the pricing practices, they resulted the company facing a possible $14 billion in additional liability. So someone has done studies and is coming up with these numbers. The article itself did not say how this $177 million they didn't show a methodology. They just took comparisons using generalized terms, I believe. I don't think they.
Well,
Yeah.
not to debate your exact point, but the Tax Foundation did not undertake to make an estimate. So there was no methodology that they proposed to follow that would allow for an estimate. In fact, I think that they probably, I don't think they stated this, but I suspect if you ask them, they would say it's futile. What they did do, though, very effectively, is undermine the methodology that leads to the 177 million. The 177 million is effectively meaningless. So I think that leaves us in a predicament where we have no way to estimate what the consequences would be of implementing worldwide combined reporting. It's an assumption that it would improve New Hampshire's revenues.
Mr. Chair.
Yes, Representative Ulrich.
And I haven't done as deep a dive as I would like into both of the articles, but on the surface, the question that comes to mind is, you can only tax a entity, whether it's a human being or a corporate entity, so much before they just say, throw up their hands and say, we're not going to play this game. If we cannot reimburse our investors and make it profitable for them to give us money, which is where their growth comes from, is from people investing in it and getting a return on investment. I mean, they even have an acronym for it, an ROI. The question is, in my mind, does this, to use a cliche, overtax a business to the point where it would just say, we've got some nexus to your territory now. We're not going to have it anymore. I'm thinking of a manufacturer over in the Cheshire County that decided, rather than expanding in New Hampshire, not just because of taxes, but for other causes as well, he was going there. That corporation expanded down south. I know of another manufacturer over towards the seacoast area that did the same thing. We've had this happen time and time and time and time and time again, where people have left here. Which brings me back to the question that I asked Mr. Wong earlier regarding the amount of revenue derived from our tax base over time, as to show when it was low, when it was high, and and we discussed with Mr. Spilsbury the tax rate implications of that. I'm just a little concerned that we're getting into a position where implementing this may wind up making the tax rate so high that we get an initial plus, an initial rush of money coming in, and then saying, well, you got some vacant property on this street, and you got some vacant property on that street, you got some vacant property over in Litchfield right now, which is going to be housing. But I'm really concerned about overtaxation of an individual, because you can, and there's plenty of economic proof to this. You can go back to the Laffer curve. You get more income here than you do. You get taxed at 100%, you get zero revenue. You tax at 0%, you get zero revenue. Somewhere in between there's a sweet spot.
May I respond? No.
Yes.
I don't think we're talking tax rate. I think we're just talking tax liability. I'm
She's here.
sorry. I don't think we're talking tax rate. I think we're talking your tax liability. Are you paying your fair share of what you have done in New Hampshire? Because New Hampshire has provided infrastructure, has provided you educated workers. That's where I think that we should be looking. Tax rates are things that we can debate in ways and means, but this is more of a, what is the tax liability? Is it a fair tax policy we presently have? That is the question. And I think that we wouldn't be in this if we, and Senator, no disrespect to your other side of the wall there, but when they,
No wall in this room.
I know. When they went to the single sales factor without a study or without putting it forth for us to look at for the next 4 or 5 years to draw these numbers together and see what is best, do we walk away from our bifurcated approach of sales and payroll and without any data? That's the part that bothers me. And if we had that, we may not be pushing as hard on this right now. I just got a feeling that single sales factors is going to affect our revenue because it's sales within the state, not going out.
So if I can pull a theme out of both your comments,
Yeah, that'll be hard.
I think they're reconcilable. So there's no question, even if it's purely a theoretical point, that taxation at the margin at some point will affect behavior. Behavior can be affected in a whole variety of ways, from one end of the spectrum, increasing your investment in New Hampshire, to the other end of the spectrum, pulling out of New Hampshire altogether, and a vast array of decisions in between. So the rate, I agree, that's one variable in the equation of tax burden. How you define the base, the tax base, is really what we're focused on in this commission, and that's another variable. But I think that Representative Ullery has raised a question. It's, I suppose, ultimately a judgment call, because we don't have the ability to quantify at what point people will react adversely. But the fundamental purpose of taxation is to fund the basic needs of government, and that's a calibration and a judgment call that on the other side of the equation requires policy decisions about how far you go in taxation. And soaking the taxpayer isn't always the ideal answer, because you can easily find, maybe after the fact, that you were beyond the point of diminishing returns. So I do think that lurking behind everything we discuss in this commission is a judgment call on tax policy, whether trying to expand the base in ways that are burdensome and complex and unquantifiable and uncertain is a wise idea. That certainly is, what I'm trying to distill virtually all of our discussion down to. So, others? Mr. Kennedy.
So relative to, we had a presentation that the New Hampshire taxation of guilty, and I know keep kind of coming back to this, but is kind of unique across the states. And when we discuss the guilty tax, the current taxation of guilty in New Hampshire would presumably go away if we went to a worldwide reporting. So we have a potentially known quantity in the future that'll tell us how much taxation is being generated from the guilty income that New Hampshire taxes versus the unknown that would come from the new apportionment, where an increased denominator that we don't know the results. The other item, and I'd ask this question, is the concern that local businesses are paying a higher percentage of the base is because, in theory, the entities that have foreign corporations are shifting that profit overseas by means of taking a cost deduction here in the U.S. and the profit going, and the revenue going over to overseas, and whether or not a potential alternative approach would be to look at the transfer pricing issues and having New Hampshire address that specifically for domestic companies that are paying their foreign subsidiaries to reduce their profit here in New Hampshire, which may be in my thought, would be a simpler means of addressing those entities that are shifting their profits overseas without converting everybody to worldwide reporting, with the additional risk that we don't know how that increased denominator is going to affect the revenue stream. And on something of a slightly off-topic item, though still kind of pertinent, in terms of the bills, and I don't recall the bills that are in place to move to worldwide reporting, but my understanding is the theory by moving to worldwide reporting is that these entities that are not just local but are foreign would have a higher base and pay additional taxes. But I haven't yet heard, how does this save the domestic smaller businesses from paying more taxes? Is there something in the bill that says if we reach certain revenue levels that the business profit tax rate would go down? How do local businesses, domestic businesses without foreign entities, actually receive a benefit if we were to move to worldwide reporting? And I'm unclear as to how the folks that have said, well, we're paying too much, but I haven't seen how do they pay less if we move to worldwide reporting. How does that come into play?
Very good question. I was wondering, and I respect completely, so I don't want to imply anything else. Our testimony a week ago from a painting contractor left me wondering, how does doing this or not doing this change the tax bill of a painting contractor? Uh, maybe there is some level at which a New York-based business is in direct competition with a foreign-based supplier of the same product or service and finds himself in some kind of a direct competitive disadvantage. But from the standpoint of smaller businesses that are not directly competing, I just don't see that. And from the standpoint of mitigating their tax bill or changing their own company's internal, P&L, I don't see it. So I think you've raised an extremely good question, and I don't think there's been an answer. Representative Schamberg.
Yes, Mr. Chairman. I think, Mr. Kennedy, that it's more of a moral issue here that we're saying those that are in a BPT class, those that companies, some of those companies are able to use accounting procedures through transfer pricing that the domestic companies can't use. And if you're in that same class, you should be treated, you should be able to use the same techniques, the same tools that the others are using. I sort of agree with you on the transfer pricing. It's something that has not been, I say, challenged by the state of New Hampshire to try to bring a more equalized approach to this. But it's more of a moral issue here. The tax policy should be in a class should be the same, and it's not. It's legal what is being done. There's no question about that, but by the multinationals and their accounting departments. And if you're an accountant, you better be getting your company the best deal they can get by using what is there. I have no problem with that, but those that are within there shouldn't be excluded if just because they're domestic. And I find it very hard to say that the reason they're paying more in their tax liability is because the others have been able to reduce theirs with methods that the domestic companies can't use.
So I think we can all stipulate that transfer pricing exists. And transfer pricing is particularly available when it comes to intangibles like patent rights and licensing fees and so on and so forth. It exists. If you study that subject, you find that there's a vast array of perfectly normal, customary, sound business practices to support transfer pricing, and to make sure that the costs of having invested a huge amount on R&D and developing patent protection and so on is shared across various entities. So pharmaceuticals devised in the United States that are later sold worldwide, for example. The question, again, unmeasurable, is to what extent have these transfer pricing tools been used in an abusive way? Abusive as we might define it being to minimize taxes. I think that the conundrum for any state, especially this would be true for New Hampshire if it's the first and only state going back to worldwide combined reporting, is that we don't have the apparatus of the federal tax code or the IRS working with us. As Keene has pointed out, the starting point for a BPT filing is the federal tax return. But the further that New Hampshire strays away from the federal model, the less that that's true, the more supplemental filings and adjustments have to be made, which again increases the audit burden. So I think if this is not a preemption matter, we know that the federal Congress has not preempted and that legally we could do this if we thought it was the right thing to do. But when you don't have the federal government going down this path, you got to ask yourself, what are the reasons why the federal government isn't chasing this revenue, quote, left on the table in the way that we're contemplating doing it? And I think if you dig into that, what you find is that the federal government isn't chasing revenue left on the table using this particular method. But look what has happened. There have been international negotiations. There is a proposal that has not yet coalesced to have a 15% worldwide minimum corporate tax. Strong arguments in favor, strong arguments against, but that is motivated in large part for similar reasons. The 2017 Tax Cuts and Jobs Act included a number of steps. It implemented the GILTI that we've been talking about over again. It includes BEAT, base erosion and anti-abuse tax. It included the mandatory repatriation tax. And here we sit in New Hampshire, having gone to single sales factor, but we also tax GILTI relative to the other states aggressively at 50%. And simultaneously, we tax the foreign dividend sources. So there are a whole array of different efforts to try and mitigate against the tendency that might exist to use transfer pricing for abusive tax avoidance purposes. And I think we should take stock of the various ways in which the federal government has tried to move in this direction and ask ourselves, why did they never take the bait to go to worldwide combined reporting?
Just a little counter.
Yes, absolutely.
You asked the question.
I called for a robust discussion today, so let's have it.
You asked the question, why did our government, why has it not?
Mhm.
Well, it's the one that initiated it by the secret agreement between Margaret Thatcher and President Reagan at the White House. And you did receive that study in your,
Can I just clarify that? The
yeah. Well, it was
the secret, I just want to make sure that we're characterizing this letter correctly. I've read it. So the letter from Ronald Reagan to Margaret Thatcher says, we're going to create a worldwide unitary tax working group to try to persuade the states not to implement worldwide combined reporting, but rather at most to adopt the water's edge limit. So the secret agreement, as you're characterizing it, is just simply a letter that says the U.S. government is not going to implement combined worldwide reporting, and we're going to dissuade any of the states from doing it, and we're going to ask those states that have adopted it to unwind it. And they succeeded.
with promises that the federal government would assist the states with their ability to get the information they need for their tax policies. And the working group did not come down and apply that to the state of New Hampshire.
Can you elaborate on what those promises were?
I'm sorry, on the one.
What the promises were?
That's in my book that I gave to you.
Okay. Yes, Representative Valerie.
Just one word, secret. Everything every president does is secret.
Well, for 20 years, all right. So, but I think point is, the federal government wanted a change because of outside influences, not within the country, but outside. The foreign nationals wanted some change to protect a certain party in England in their investments that go throughout the world. The royalty, the king and queen of England. And that was a start. And I think that we have put ourselves in a position because of political, I don't want to say this, political promises that maybe would come down the line if the state of New Hampshire were to step away from worldwide reporting to various political individuals that were in the state at the time. I think there were future possibility of positions within the federal government, which a corner office was looking at to try to, make sure that this was passed. And in my study that I did and wrote about, the DRA came forth and pushed this as the force that needed to say we needed a change. And it was not something that the Ways and Means Committee at the time was looking to enact. There was a question by Representative Jones, I believe, Robert Jones, that said, we want to get the tax that is required, no more, no less. But he worried about the constitutionality of it. And then the corner office came in and said, we need to do this. We need to do this for the state of New Hampshire to get investments and things. We were getting investments. It's just a political approach that someone made a promise to somebody else. And that's the reason we're at this position now, that I have brought this back to try to get a fair and level playing field.
Ironically, I was actually involved.
Oh, were you?
Yes. So in 1993, as an associate attorney with Wilmer, Cutler, and Pickering, I became admitted to the Supreme Court bar and participated in writing an amicus curiae brief in the case that went to the Supreme Court on this subject. And there is no question whatsoever, if you go back and look through the record, that Congress did not want a federal combined worldwide reporting law. And the question of preemption that was framed in the case was whether the Commerce Clause somehow preempted California from implementing worldwide combined reporting, even though Congress had not taken affirmative action. And the Supreme Court determined that it was not, and that California was free to go ahead. So the irony is that just after the Supreme Court cleared the path for California to implement combined world reporting, there was a sea change on the policy side, and all of the states largely participating in the Worldwide Unitary Tax Working Group, which included, quite an array in state legislative representatives, some governors, and so on. There was a sea change back away from it. So very, very ironic. It's an unusual example. The Supreme Court clears something that's controversial, and no sooner is the ink dry than the states start pulling back, including New Hampshire. So I think that the notion that there was just a political agreement to appease Britain misses the overwhelming scene that was going on at the time.
Well, the former commissioner, Lloyd Price at the time, and then Everett Taylor, who was the DRA commissioner at that time, Price says he stated that in his administration, now in 1986, he was not the commissioner anymore. He was, I don't know where he was moved to, but he was not the commissioner, because in 1983, he wrote some statements that he would not step away from worldwide reporting. but he testified that the administration, right or wrong or indifferent, his administration never did go totally worldwide. We never did foreign tax dividends from foreign parents, I mean. We never taxed foreign parents, okay? Even though California did. He added that if he were a tax administrator in a business, he would make sure I shift all of the income and profits to the foreign parents. We know as we sit in this room, there are certain corporations who shift their income to states that do not, and this at the time, to states that do not have a business tax. And then Everett Taylor followed up with, he agreed with the testimony and that if you do anything other than Unitary in the state of New Hampshire, you're going to destroy the tax base. He said he believed that the business community would probably want to go to single accounting. If you do that, there is going to be an awful lot of profit being siphoned out of the state. We had experts that were trying to tell us back then that there is revenue being siphoned out of this state. And I believe that political pressure was still very strong then on why they came to going to Water's Edge.
So it's a nearly 40-year-old discussion, and I would stipulate that there is revenue that gets drained away. If we're ready to acknowledge that there is revenue given away, it still begs the question whether it's sufficient enough that it's worth the becoming an outlier, running our tax system differently than any other state or the federal government or the rest of the world, and enduring the complexity and the burden of enforcing it. That's, I think, the question that this commission needs to decide.
I do not argue that point with you. I just argue that our tax policy should be fair and level. It should be equal for all those that are in that class. And I think it's a moral decision that we're going to have to make on this committee or this commission. As you've told me in the past, Representative Ulrey, we don't pick winners or losers, but someone picked winners and decided the other group was going to be losers on this.
So question, by the way, all members, please put your hand up as soon as you've got something to interject. I'm not trying to dominate.
That's an interesting discussion.
We sit so far apart on regular ways and means. Enjoyable. Sitting right next to him.
I think it's a huge question, even if you stipulate that transfer pricing is used to reduce tax, and that there are ways in which that's done that might be regarded as abusive and might be regarded as coming at the expense of the state of New Hampshire. For sake of discussion, let's just assume that that's true. I don't see that worldwide combined reporting aims at the right target. So let's just say that I'm the CEO of a multinational corporation that has, the one I used to work at, I was not CEO, but we were in 76 countries. So you're in 76 countries, and maybe you register your ship in Singapore or Panama, and maybe you have certain marketing operations out of Bermuda. Maybe you do these things because you're running a massive, complex conglomerate. You're not necessarily doing them with the United States taxes specifically in mind. You got to pay taxes in 76 countries. And you're certainly not doing it with New Hampshire in mind. And I don't think the corporation I worked for was especially complex in the realm of large multinationals. So how does reporting the net income of 76 countries do anything to address the question of transfer pricing to a so-called tax haven country, which might have been one or two or three out of the 76. I just don't even see how combined reporting, if it was, implemented, and if it went smoothly without too much of an audit, I still don't see how it recovers the impact of transfer pricing that one might characterize as abusive. And I think if you go through those tax foundation articles, you'll see that it's going to be a real crapshoot whether in a particular instance for a particular corporation in a given year, New Hampshire gets more or less.
Mr. Speaker,
Thank you, Mr.
if,
Kenny. Yeah.
if I can address that, and Matt, I'm sure will correct me if I'm a little off here, but when you would have a combining of entities, the related party transactions are usually removed during the combined reporting. So simply stated, if you have a New Hampshire company that's paying $1 million to a UK company for royalties or whatever, and those entity information is then combined, there would be an eliminating entry to remove the transfer pricing cost to New Hampshire and the income at the UK level. So the transfer pricing activity, I'm presuming, would largely go away as a factor here.
Makes sense. It neutralizes,
Yeah.
becomes a wash.
And then what comes into play then is the apportionment issue, which is how much were sales. And as you were talking, you made me think of another level of complexity relative to sales. We've recently moved to single sales a few years ago. We've more recently moved to market-based sourcing, which simply stated is a theory in which instead of the cost of performance, which is where people are doing the work, the sale is allocated to the state, or in this case, potentially the foreign entity, where the benefit of the service or the item is received. And this gets very, very complex. Many states have moved over to this, and New Hampshire recently took it on in 2022, I think, is when it was implemented. 22?
21.
21, thank you. I better go back and get my 21 returns.
One year before the single sales factor.
That's right. So that's very complex, especially when you get into, say, intangible items, or who's receiving the benefit, where is that place, which again not only complicates it, but in trying to identify is New Hampshire. Is it New Hampshire that is receiving the benefit of this? It's possible that it would further increase the denominator or dilute the numerator for New Hampshire, because maybe it's and I don't really know how it would work in theory, but I think it's more complex, but I think potentially for these foreign countries, especially the ones that are foreign entities that own U.S. companies, you might say, well, the benefit is received entirely overseas for market-based sourcing when that is applicable, which again means that New Hampshire is actually maybe losing some of that U.S. revenue. And I have no idea where the numbers would fall, but I certainly think it's something to consider in the process of another unknown.
Well, really great comments, and I think you're highlighting another thing that we need to really pay attention to, and that is the law and the climate in so many ways is different today than it was in 1980 or 1986, the last time that the state made decisions on this subject, implementing and repealing. So the advent of the BET and the credit, the single sales, the market-based sourcing, the taxing of guilty, the federal scheme for all of this, international relations and proposals that are still being discussed. I think another thing that we should take stock of is the fact that if the assumption is that businesses are incentivized to move profits away from a higher tax country, then it makes a difference what is evolving on the tax rate side. And so in 2017, the Tax Cuts and Jobs Act reduced the maximum corporate tax rate from 35 to 21. That's a big deal. And at the same time, the state of New Hampshire, through a series of increments, has reduced our BPT from 8.5 to 7.5%. We've simultaneously been reducing the business enterprise tax rate. So when you see tax rates coming down that mitigate the margin that theoretically is being exploited, you've got some reason to think that the problem itself has been reduced. Yes, Mr. Foley.
The one clarification, like, so if you had your 76 countries and companies and were worried about transfer pricing abuse to a Cayman sub or another low tax, which is more infrequent now, as you mentioned, because of rate reduction in the U.S., right? If this is a U.S. multinational, those 76 companies, again, are put together in part of GILTI, which is already in the New Hampshire tax base. Now, there is a hurdle level called 10% of qualified business asset investment, whatever it is, QI. And then there's the 50% reduction and the apportionment that we've already heard about. So those are tweaks where if you're worried about the fairness of it, it's already in the base in one form or another. It's just the taxation allows for these other things that may be deemed dilutive or not fair, but they're in the base, right? So I just wanted to highlight that fact. We've had a concept of transfer pricing creating base erosion, right, as compared to it's in the base. It's just how the state's chosen to tax it. And I think the cost analysis was pretty interesting just to see New Hampshire's taxation of foreign income compared to other states where it's high, right? I mean, just on that analysis. So I just wanted to highlight that where we're mentioning the 76 companies where it's in the base through that mechanism, and that's the intention of it.
Mm-hmm.
When you think of GILTI, is to try to kind of mitigate that kind of offshoring of profits. Federally, there's tax credits as well that can soften that and all that, but the state doesn't have that. So
Right. And I thank you. Good points. I think the fact that the federal government deals with taxation assessed and paid in other countries through credits, whereas the state of New Hampshire deals with the uncertainties of where revenue is derived through formulary apportionment, is just a monumental distinction. Representative Schamberger, are you hesitating?
I'm hesitating. I just, when you went to the term transfer pricing, there's another part of that should be an arm's length approach that the federal government has stated. And too much of that is not separate. It's not like the chair and I, if we each had a company and we're separate, we could negotiate and say, okay, I'll charge you this or that. But a unitary company, that the chair has himself, the senator, you, Mr. Kennedy, could say, or Mr. Foley, could say, even though Representative Schamberg would only charge you $10, we're going to charge you $100, and you'll be able to take that and reduce your tax liability when you file your paperwork. And I realize GILTI, but it's only on U.S. based national companies, not the foreigners. And I think we're missing part of this. We're not including the foreign nationals, multinationals in this, and this would include them. But
So I
back
think
to that term
we
again,
were making that
arm's
distinction
length.
before. Correct me if I'm wrong. We are including the U.S. based subsidiary and activity of the foreign multinational enterprise.
Yes.
We're not including their non-nexus foreign activities. And that's true for GILTI too.
yeah, so it's correct. And so and where it's interesting, so I've worked with many clients, more on the smaller side, purposefully, right? That's the space I want to play in. But there's two classes I encounter a lot from the foreign side, just to highlight it. One is I like the U.S. market. I'd like to start sales in. New Hampshire seems nice. I vacationed there once when I was a kid, what have you. It's strange how these decisions are made, right? This, that, the other thing, and I'm going to establish a subsidiary there and start hiring there. So in the relative scheme of the wider business, it's kind of small. It's a sales venture, right? That's what they're doing. The other common one that I encounter, and there's obviously large, big ones, and we can talk about that, but is entities that are looking to raise capital here in the States. And so they actually do an anti-inversion, right? We think of inversions, U.S. going foreign. They go foreign and become U.S. parented because that's how they can get investment here in the States. So it's funny, as we've talked about all these things pushing things out. I just want to highlight, those are the two experiences I'm seeing.
So for example, this would be a way of getting listed on the New York Stock Exchange or NASDAQ
They
or what
want to
have
get
you.
the stock exchange or become attractive to the PE or VC funds that are here. Generally, one of the conversations when we get to these kind of accelerators and whatnot is, how are you going to become a domestic, a U.S. company? Because unless you're a real rocket ship and a standout, usually they'll pass on that investment without it being a U.S.-based company. So it's kind of interesting, just in that regard.
Very interesting. Um, are we at a pause? I think it's worth taking note. Meredith Beeson, who was with us last Monday, has been tuning in and heard our questions about the Minnesota and Maine, and has done a little research, which I'll take this as good information unless someone comes up with something different. And I'll just read it to you. The Minnesota House Tax Committee heard HF 2883, a worldwide combined reporting bill, and then it was inserted into an omnibus tax bill, HF 1938. This included numerous other proposed tax policy changes and was passed by the House. The issue was never introduced or even discussed in Senate committees as a standalone bill, like it was on the House side. The mandatory worldwide combined reporting provision within HF 1938 was then removed during negotiations by House and Senate tax committee members before the final passage of this omnibus tax bill. Well, we all know how those dynamics work. In Maine, LD 428 commissioned Maine Revenue Services to do a study to further look at worldwide, and the state released their report in February. There's been no further discussion on the issue this year. So we might want to, I don't think I've seen it yet, we might want to get a hold of the Maine report. Thank you, Ms. Beeson. So, I think that the presenters prepared us to see both sides of the question. And in the colloquy here between Representative Schamberg and myself and all the comments, I think we've pretty much put the issue up on the table. I think we may need to tease things out for a for a report and for adequately explaining our conclusions, but we pretty much know now what I think we're going to know in the time frame that we file this report. I guess my question is, at least tentatively, is this a good time for us to each give an indication for where we think we should go so we can see how it is that we're going to draft this report? Yes, Senator Murphy.
I wonder. I'm sorry. I didn't know. My
Okay,
light was
Mr.
on,
Kennedy,
so.
sure.
Before we get to that, I wonder if we might just hit the bullets relative to some items that are generally accepted as base, and I don't mean take a long time, and then some of those things for and against, so that, because I think there are some things that we haven't discussed today that were mentioned before. Perhaps they were, but I remember there was the reference to retaliation of other countries, and we've sort of touched base on that, and New Hampshire being an outlier, that we've also touched base on that. But I was kind of looking to just summarize the bullets to make sure that
Sure. Why
I
don't you take
fully
a stab at that?
all right. So relative to what I think we've all decided as understood is that moving to worldwide reporting is not a constitutional issue, that the Supreme Court has determined that would be allowed, that transfer pricing exists, and likely or probably means that revenue is being siphoned away from the state because of transfer pricing. And that New Hampshire doesn't currently tax guilty, which is somewhat unique and probably likely includes some ability to
Sorry,
tax
did you say doesn't or does?
does tax guilty, does tax guilty. So those things we all kind of understand. Relative to the arguments against, there's an indication that this would make New Hampshire an outlier relative to the moving to worldwide reporting. We have concern of retaliation of other countries, which may include losing local businesses. It would be more burdensome for both practitioners, for businesses, and the New Hampshire DRA relative to compliance and audit. And again, the argument against is that New Hampshire does already tax guilty, and foreign income is already included at some level, whether to foreign dividends or guilty income. The four would be that largely that there appears to be, because of the transfer pricing, that there is an inequity between domestic New Hampshire companies and foreign companies, that this would address the transfer pricing issue to make things more equitable, and in theory keep profit within New Hampshire again on a theoretical basis. And I'm sorry, some general items of just data is it's unknown what the revenue results would be, what the effect in terms of how this also plays with guilty. Potentially there are alternatives instead of going to worldwide reporting to address the transfer pricing issue. And we don't know, in terms of the revenue results, we don't know how the denominator would change relative to now having to apportion out of New Hampshire. So those are the bullets that I have, and I'd be very interested if anybody else has any bullets beyond what I just identified.
Thank you very much. I think that's helpful. I'll just make a comment that regardless of where we land on our recommendation, I want to make sure that our report is a full disclosure document. And so, acknowledging the pros and the cons, I think, is part of our duty in reporting. And, so for example, if we recommend against it, we still need to give the reasons why its proponents thought it would be worthwhile. Yes, Representative Ullery.
Yeah, to exactly that end, and thank you for coming up with those points. It's a pretty good start. Matter of fact, it's an excellent start. However, with your second point regarding transfer pricing exists, but we've also heard that we don't know that it exists. We're presuming that it exists based upon corporate behaviors. How do we get that nuanced in there?
So even if we stipulate there's an impact, it's fundamentally unquantifiable.
Yeah, that affects two different issues on that. That's a language issue, and we're not just writing this for economists, with all due regard, but we're also writing it for the common guy that sits in a house of 400 people over there with a wide variety of experience. So, which leads to my second question. We need to define the term denominator. Well, you guys know what it is. It has to be, the language needs to be as to what it is.
I
You
think
understand
that's
what I'm saying?
that's correct. I would agree with that. I would like the report to include a description of what it actually means to combine all worldwide entities and what gets swept into the equation as a result of it, and how does that affect the the resulting dilution in that same formula of the New Hampshire activity. You know, something that may be we're 1 out of 50 states, right? That's 2%. I was reading some program within the last 2 years where I saw that the New Hampshire share, based on population and so on, of some federal largesse was 0.34%. So if a very large corporation doing business in all 50 states has, for sake of discussion, 0.34% of their activity in the state of New Hampshire, and they also happen to be multinational, what percentage of this revenue we're forcing them to report will actually be attributed to New Hampshire? I mean, I won't say negligible, but it's a very small percent. I I think one of the things I'd like to include, when we're doing the pros and cons, is mitigating factors, specifically taking note of those changes in federal and state law since the 1980s that at least potentially have mitigated the issue. So I don't need to relist them, but all those things having to do with the rate and what we're currently taxing.
Mr. Kennedy, could you email me those pros and cons at the point?
I can put my list together and send it off. Absolutely. I'll send it to everybody on the committee.
Please, thank you.
Okay. Further comments? Well, yes.
I'll chime in. I don't think it was clear to me today, until today, Mr. Chairman, the disadvantage I was at on this committee in terms of background and knowledge. I have read everything provided. I've watched either in person or recorded every speaker. But you wrote an amicus brief on this issue. This is clearly a matter of passion and commitment for the published author, Representative Schomburg. Keen is the counsel for the DRA. I've got a gentleman who makes, Mr. Foley makes his living as an accountant. And Mr. Foley, you were on this committee last year as an accountant, and Mr. Kennedy was the BIA, yes. Any case. So I had the most amount of sort of catching up to do, I think. And perhaps it would be my only thing I can bring to the table is sort of a fresh face approach to it, because as familiar as you all are with this topic, I was not. And despite having served some terms on House Ways and Means and now Senate Ways and Means, and having a basic understanding of business taxation and state law regarding this, I knew very little about the concept of unitary worldwide taxation before I walked into the room the first time. But you asked where we think we're coming down, and I can only speak to myself in that matter. I think the cost of compliance, I've been convinced the cost of compliance would be inordinately huge. I don't think there's any chance the cost of compliance is going to be offset by whatever revenue we may or may not gain as a result of adopting this. I'm also hesitant to embrace increasing cost on these corporations, because as we all know, all costs we apply to corporations are passed on to consumers at the end. I think it'd be potentially a disadvantage for New Hampshire companies and discourage future activity by those companies in our state. and I have to say, you know, we all come at this from our own philosophical and political backgrounds and viewpoints. I kept seeing Delaware and South Dakota mentioned, and I suspect that different people look at those states and think different things. My reaction was, why are we letting them have all the fun? Maybe there's some lessons there for us, but that's my approach. And I also think, just in conclusion, that one of the big advantages of our tax system is that it's simple in New Hampshire. Our corporate taxes are simple. And I say that as somebody who actually files them every year. You know, it usually is a single piece of paper, double-sided for my companies. And I would be hesitant to make that immensely more complicated. I think it's the cost of compliance right now is very low, and it should stay that way. So you asked where we would stand. I'm coming down against it myself. Thank you.
Thank you. Great comments, and thanks for taking the first leap. Who wants to go next?
Senator Murphy sat near me several years while I was in the House, and sat here on Ways and Means at the same time. He's expressed several points that I concur pretty strongly with, as a matter of fact. Particularly the fact that whenever you start attacking the ability of an enterprise to earn a living for itself and pay back its investors, and then also grow, which then provides jobs, is a tax on people. Because the only people that pay taxes are people, not corporations. That's something we need to, sometimes gets lost in the mix of numbers. Thank you.
Thank you. Now, I'm looking at Keen. Keen and I had a brief conversation before we began, and of course, it's the position of the DRA to remain neutral. So that puts Keen in an interesting position as a voting member, and I'll let Keen explain how he intends to navigate that.
That is correct. So the DRA remains neutral on this issue, and the DRA will do its level best whether the finally, if the commission or the legislation decides to go worldwide or maintain Water's Edge, we will continue to do our function as the revenue administration of New Hampshire. And with that said, we are neutral on this.
So if there were things that had to do with procedure and so on, you might weigh in. But as to the pro and con on the bottom line issue,
Yeah,
pass.
that is correct.
Very
Yeah.
much understood.
Yep.
Mr. Kennedy, you ready?
Yes.
I saw that light on, so
Well, and oh gosh, I should have turned that off a while ago. So I guess to qualify, I'm also somewhat neutral, except to the extent that to me there's just too many variables and an unknown, which is concerning. I think the things that come to mind, though I certainly do appreciate wanting to make the playing field equitable and even. And I'm just not sure that from the information that's been provided that we have enough information to know that moving to worldwide reporting would actually do that, given that New Hampshire does tax the GILTI tax, given we don't know what the denominator would look like relative to the numbers. And I believe there are too many unknowns. This in conjunction with, again, I appreciate that we'd like the playing field to be equitable, but I don't actually see the direct benefit to smaller businesses right now. If there was something that we felt that, okay, well, now that we have more revenues coming in, so the rate is going to go down or something. But with all of those things, and lastly, the idea that maybe there is an alternative to addressing the transfer pricing rules, which we haven't, which is not a bill or anything, that those factors kind of guide me to say that the complexity of moving to worldwide reporting It might produce a benefit, but it's probably just not at this point. It's just too unknown.
Very good weighing of the factors. Mr. Foley.
I should have asked before to the society. I assume I'm neutral here, which I think would be our stance. You probably know. But it certainly, I think everything said preceding me kind of covers the facts, and it's certainly an interesting quandary that's been wrestled since the 80s, right? And the enhancements in 482, which is the transfer pricing code, and the cross-border litigation, and having worked on those projects, which we luckily haven't gotten too far into, it's certainly an interesting space, and a space that's been scrutinized and will continue to be. And I think this has been an interesting part of that. So,
Okay. Representative Schamberg. I guess I'm holding my own thoughts last.
Oh, yes. Well, as usual, I will probably be on the minority end of this, okay? I feel that our motives on this commission, probably require a moral responsibility and a political responsibility. We can't separate the political, we can't separate the moral, even though we know that this was done for the benefit of the foreign multinationals. And by saying that, I go to the only authority that has stated it back in 1999, and that was the New Hampshire Supreme Court. Stated that this bill, this law, Water's Edge, was drafted, it was presented for the benefit of foreign multinationals. And no one has taken up that cause since 1999. So I think what you're going to see is that I will write a piece. My report will be for the passage of this. That'll be my recommendation. Because I believe that when you have the highest authority in the land, in the state of New Hampshire, say this is something that should be addressed, and it was never addressed even from 1999 onward. I don't know why someone hasn't addressed it, but I am for it. So,
Okay. You're standing your ground. So I'll give you my views. And much of what I believe has already been said, so I won't repeat everything. But I wouldn't deny the potential for transfer pricing to be used for tax minimization in ways that cost New Hampshire money. I would stipulate to that. I would just simply use that point of departure to make the comment that it's unmeasurable and inherently speculative. And there are plenty of reasons to believe that it's not huge, that it's nowhere near $177 million. But again, I'm speculating even when I say that. I think that the costs, the policy costs of having New Hampshire venture into, territory all of its own, in this case, are potentially quite great. I'm not an apologist for New Hampshire. I'm perfectly happy that we do many things in our own way here, including the BPT and BET. I'm perfectly comfortable with the fact that we reached our own conclusions on how to deal with GILTI and foreign dividend income. But I believe that when you take stock of all of the legal changes, both at the national level and at the state level, over the 40 years, the discussions and the relative merits have shifted. And we're not in the same evaluative equation that we would have been if this was 1987 or 88 and we were considering flipping back. So I think that the fundamental challenges for the tax filers as well as for the administration for the DRA are monumental. And I have a much easier ability to, if not quantify, to visualize the cons. The cons come across to me as more extensive and more compelling than the pros. The pros, I wouldn't deny them, but they're too theoretical to persuade me. So I would take the view that this commission make a recommendation to not proceed and to specifically recommend to House and to Senate Ways and Means that this is not a scheme that we should implement in New Hampshire. So having said that, I think we have several members who are kind of in the neutral area, and we have a proponent who wants to make that case. And we have several of us who I think have come down on the con side. And maybe it would be worthwhile to have 3 drafts. A advocates draft, which I would ask Representative Schamberg to do. A opposing draft, which unless somebody else would like to jump in, I'm willing to do. I've been anticipating that duty might fall on me. Yes, I've got notes. And then I think it may be that even the neutral parties have something to say in terms of, you know, the pros and the cons and the complications. And I think if we can suss out perhaps something that Mr. Kennedy and Mr. Foley work on together, something that Representative Schamberg prepares, something that I prepare, and circulate those prior to the 17th, we may be in a position on the 17th to, you know, draw our conclusions, and even if there's some editing that follows. How does that sound to everybody? So will you 2 gentlemen take that assignment?
I'm sorry. What's coming to mind is you had mentioned that the reports would weigh both the pros and cons.
Yes.
So I'm thinking more that whatever we compile would maybe be incorporated into your report as, you know, I'm opposed, but we recognize there are pros and cons on both sides. So I'm not sure we would need a third report to actually, again. It's
Yes,
not
I think that's very much as I think it would probably unfold. You know, let me just say that personal perspective, I hope, but when a legislative body decides that it's not appropriate to go forward with something, that doesn't always mean that it's a terrible idea or that it's not at least conceptually well-founded. It just means that on the weight of the pros and the cons, there's not a compelling enough reason to proceed with it, right? And so even a whole bunch of neutral commentary essentially represents a lack of conviction to go forward. And we can see how what we've written melds together. And I think you can certainly help bolster whatever I draft in terms of making sure that the report recognizes all the relevant factors, both pro and con. Yes, Representative Valerie.
When you talk about 3 reports, I don't necessarily see that as 3 reports,
Right.
as much as 3 sections within a report.
Agreed.
And so there wouldn't be a minority report as such, but there would be a contrarian opinion view, which Tom is very good at being a contrarian. And at the same time, the non-partial view would probably be the corpus of the report, and the final conclusion would be there's all sorts of stuff. You make up your own mind. To in one way or another. Am I reading that correct, Mr. Chair?
Yes, I think very much. Once we see the drafts, we'll know how well they fit. But yes, I agree with you. And I think it's the commission's report, which will, as you say, have sections. Okay, well, we did, I should have mentioned this at the beginning, we did make the decision to live stream. We know we have people who have tuned in, and we are creating a record on a very, very complicated subject matter that hasn't been revisited this seriously in decades. So it's also good that we have a recorded, view of this. I know I'm going to go back and tune into the summaries here and make sure that that my notes are truly complete. So, thank you. And unless there's anything anybody else wants to add, I think it's been a terrifically productive meeting. I look forward to getting back together in 2 weeks on the 17th.
12:22.
Time is 12:23, and we are adjourned.
We
Oh.
go,
Okay, I'm with you. Thank you.
Oh, thank you. I've learned a lot. Probably more than any other commissioner. I've been on more than 10 of